From the dusty streets of Soweto to the skyscrapers of Toronto, Mining Weekly's Resources Watch covered it all. Join us as we highlight the most watched shows of 2010. We kick off this year's Top 10 show with the story of Colombia's mining industry keeping its eyes steadily on the country's mining policy under a post-URIBE government. The policies adopted by the new government in Colombia will be critical in determining whether the mining sector in the Latin American nation continues to grow the way it has under outgoing President Álvaro Uribe.
Uribe was a very good president. He cut down, he obviously made Colombia a much safer place. There is some question, though, with how successful he was in building institutions as opposed to being a one-man show that brought stability himself but didn't create the institutions that will prolong that stability. This question is going to come clear over the next few years. Concerns for Colombia, obviously, are the new government, the shaking out of the current political situation there. And as I mentioned before, the stability of institutions, whether Uribe achieved just through personal force and good government, or whether the institutions, the rule of law and security have been put in place. Taxation increases. There seems to be a global trend for big increases in taxes. I'm sure you're all aware of what's happened in Australia. Quebec has also increased taxes. There is a referendum in Nevada that could dramatically increase taxes. And Chile has come up with a very bizarre voluntary tax. So as commodity prices go up again, you begin to see a phenomenon that was happening during the last boom, and that is governments and labor unions, as prices go up, wanting a bigger cut. Whether that'll spread to Colombia or not is an open question, but it's a concern for the future. And of course, the underlying thing that worries most people about Colombia is the security situation.
Coming in at number 9 was news that Simmer and Jack Mines would close 2 Buffelsfontein gold mine shafts. New Simmer's CEO Nico Skuman told Mining Weekly that the closure of number 10 shaft, as well as the rest of number 12 shaft, was to ensure profitable future tonnage.
We have initiated the closing of the 10 shaft complex and the remainder of the 12 shaft complex. We have initiated the process, the Section 189 process, whereby we engage with the unions in terms of what are the best possible measures of dealing with the situation. We had very good support from the unions in that they are highly participative, and that they have basically asked that we immediately initiate the process of voluntary retrenchments. We do offer the employees at Buffelsfontein, we do offer them the opportunity to be transferred to Ezulwini. In total at Simmers we're employing in the region of 4,000 people. The number of jobs that at present are at risk is an unknown, and ultimately we will know what that number is once the process is completed, but it looks like something in the region of 600 people. We hope to restore full production by the end of the second quarter. We are aiming to create an environment whereby we empower, we measure, we reward based on safe, profitable tons.
This year's 8th most watched show highlighted the increased cost to build base metals mines. TD Newcrest analyst Greg Barnes said that it was becoming increasingly expensive to bring new base metals operations online, meaning prices would need to be strong to justify new mines.
The other issues that we've been fighting with or battling with over the past several years is operating and capital cost inflation. It's been endemic across the industry. Shortage of people, shortage of equipment, shortage of tires. Steel prices rising, fuel prices rising, all of those things pushing up metal prices and pushing up our long-term metal price assumptions as well.
News that gas-to-liquids producer Sasol applied to explore for shale gas in the Karoo, together with Chesapeake Energy and Statoil ASA, comes in at number 7. In converting gas into oil using gas to liquid or GTL technology, Sasol effectively speeds up Mother Nature by a couple million years. Current crude oil prices expressed as a multiple of natural gas prices show Sasol's GTL to be in a sweet spot.
We have very significant plans over a period of time to make sure that we continuously renew our mining capacity by either new mines or new shafts. So we have quite an extensive capital program plotted out over the next number of years.
Canadian miners used the annual PDAC convention to ramp up their PR campaign against the controversial Bill C-300. Anti-C-300 pamphlets, buttons and large signs were everywhere at this year's Prospectors and Developers Association of Canada's annual convention. Bill C-300, if approved, would allow Canada's government to investigate complaints about Canadian resources firms operating in foreign countries and withhold taxpayer funding financing, such as from Export Development Canada, from transgressors.
Federal Private Members Bill C-300 could be very damaging to the Canadian mining and exploration companies that work in developing countries. And so we're asking for everyone's help to stop it. While we at the PDAC share the goal of accountability, we oppose the bill's methodology. It's ill-considered and will do much more harm than good.
On the issue of Bill C-300, I will continue to oppose that, and I would encourage you, as John has this morning, to get involved, to send in your concerns. Certainly encourage those MPs who have voted against the bill, but certainly take a look at those MPs who have not and contact them and let them know of the concerns that you have.
The historic Joint Declaration, which is this year's 5th most watched show, aims to grow and transform South African mining. Mining Weekly attended the historic Joint Mining Declaration, where 13 commitments were made that will boost both the industry as well as South Africa's socio-economic fabric.
The South African mining industry has been a scene of government, labour and business conflict for decades, but the country has now moved as a collective to replace conflict with growth and transformation. Mineral Resources Minister Susan Shabangu has presided over the change.
We've got to be effective. We've got to make sure that we grow this industry in a way that takes and makes South Africa a better country.
There is remarkable stakeholder convergence across a spectrum of growth and investment matters, all the way through to beneficiation, skills development, hostile eradication and equity ownership. Dr. Raja Bedian is the Minister's economic advisor.
South Africa does have the potential, the capability and the capacity to become and to regain its global competitiveness.
There have been concerns about the extent to which South Africa has fallen down the global rankings in mining, and a sharp critic of South Africa's lack of competitiveness in mining has been regulatory lawyer Peter Leon.
It's a very important step that's been taken today, and the important thing about it is that it's in a sense, a joint venture between the government, labour and business. One could criticise it for being a corporatist approach, but the big change is, in the past, the DMR, the Department of Mineral Resources, has simply told mining companies what to do through legislation or through regulations. This is the first time, I think, since the mining charter was agreed back in those difficult days in 2002, that the key players in the industry, including labour, have got together and agreed a way forward for the industry.
South Africa has a recent history of being able to take adversity and convert it into consensus. The National Union of Mine Workers, as well as the Solidarity and UASA unions, have all come to this party, as have business and government. NUM President Senzini Zonkwana.
As NUM, I want to join you by saying that the delay was painful, but at last I believe that as we sign, we're signing committed.
South Africa is a land with incredible possibilities.
This is a good example of collaboration between the social partners and the fact that even the shareholders of mining companies, in terms of the chamber, casted their vote towards this process.
The stakeholders have the zeal, focus, and commitment to make the mining industry attractive to investors.
We had to ensure that we come up with a strategy that we were going to set us on a path to sustainable development and growth, and also to thoroughgoing transformation.
All stakeholders had their say and all committed themselves to being regularly monitored and checked to see that South Africa and South African mining is on a firm path to growth and transformation. Peter Leon.
The most significant aspect from my perspective as a regulatory lawyer operating in this industry is a very clear commitment, both in this document and by the Minister today, that the MPRDA, the Mineral Petroleum Resources Development Act, will be substantially amended during the course of 2011, during the parliamentary session next year, to give effect to the agreement which is reflected here. And one of the, I think, very important things that this document recognizes is that the architecture of the MPRDA, not just its implementation, is defective. So there's now an admission by everybody, including the government, that they need to go back to the drawing board and fix the issues in the Act, which I've been concerned about for years, like ministerial discretion, like lack of compulsory time periods for licensing provisions, things like that.
As part of this implementation, we need to create the monitoring infrastructure, if you like, monitoring and reporting infrastructure, that the society, the media, the analysts are put in the picture of how online are we with what we adopt.
And there is an enormous amount to do that only a multi-stakeholder body can do. I, for one, look forward to holding them to account on the provision of infrastructure, innovation, sustainable development, beneficiation, skills development, and living conditions.
Coming in at number 4 is Optimum Coal's listing on the JSE main board. New black-owned and controlled coal mining and exploration group Optimum Coal has listed in the general mining sector on the JSE's main board.
We see ourselves as a BE consolidator. We see ourselves as a strong BE champion in this country. And if you give us a period of 3 to 5 years, we shall have consolidated the industry.
We need an additional currency over and above cash and debt to be able to do that. We believe that we can buy assets for 50, 60 cents in the rand, on a value accretive basis to be able to grow the pipeline that we currently have.
Optimum Coal is a fantastic way to start the year with a nice big chunky listing in the resource sector. I think it's just good for the South African environment.
Our third most watched show was news that coal miner EXXARO would form a clean energy company. JSE-listed coal mining company EXXARO intends forming a clean energy company in which it will raise funding for clean energy projects with strategic partners.
Whether you like it or not, clean power is the big issue going forward. South Africa's products will become competitive only and only if we strike a balance between what we produce in coal, that is on the fossil fuels, and also on the renewables. And therefore there's great logic that we, just as it's part of the extension of the EXXARO business.
But in energy, what we're building up now, so it's a portfolio of projects, clean energy projects, and the intent is eventually to get strategic equity partners for us and form a clean energy company, which is being managed by EXXARO, and we will have a majority stake in that, and we will raise funding to actually develop those projects.
You can't produce coal to the tune of 80 or 90 million tons, which we think will be in the next 10, 15 years, and do nothing about the environment and do nothing about the alternative power.
Earlier this year, ARM CEO Patrice Motsepe was evasive on the issue of mine nationalisation. A shareholder publicly threatened to divest from African Rainbow Minerals after executive chairperson Patrice Motsepe prevaricated on the issue of the nationalisation of South African mines and indigenisation in Zimbabwe. This story comes in at number 2.
If the decision is nationalisation, and I even went further and said socialism, if the decision amongst all our people is this is what is in the best interest of South Africa and of the people of South Africa, I'll support it.
Nationalisation is bad, you won't get money and people get poorer. And you will follow nationalisation if it's a policy of this country. So then at least I can share in some of the money that's been made in South America and other places. So you won't get, after today, you won't get a cent of my money and my shareholders.
The 51% indigenization, it's an issue, and I think afterwards the High Commissioner may engage. Because you see, South Africa, for example, we had to take a certain route, because if you don't in South Africa create an environment where shareholders feel we can make money, they will not invest.
We've come to the end of our Top 10 show. The most watched Resources Watch show highlighted a visit to the first black jeweler from the South African Jewellery Development Project. Loni Prinsloo visited Nkobile Nkosi, who opened his own jewellery manufacturing and retail shop in Soweto.
Jewellery manufacturing facility and retail shop NQ Jewellery recently opened its doors in Soweto. This is the first facility of its kind in the metropolitan township. NQ Jewellery founder Nkobile Nkosi tells us how he realized this dream.
Yes, I started my training at the Infundiswa Skills Development in 2005. The training was sponsored and accredited by the Mining Qualification Authority. Basically, what they do is they take guys from the rural areas and from the township. They give them basic jewelry training and designing and manufacturing.
Nkosi has big ambitions going into the future.
Well, there's a great future for this place, for that matter. As you know, we've won a few awards in the last year. The Chat Community Award, region and national awards. And I believe if we could maybe get a contract with EdCon and maybe we could supply them. But again, there's still need for training of other guys so that we could meet that demand.
Those were the headline makers for 2010. With the global commodity market reportedly well on its way to recovery, it's best to stay logged on to miningweekly.com to see which markets will steal the show in the coming year.